looking at the market falling back in today's trading session. We had a rather quiet week, yes, in last week's trading session. So with the equity market in today's trading session really dominated by foreign investors buying into the likes of EABL and Safaricom.
Yes, actually, most of market activity was dominated by foreign investors. And as you mentioned, EABL and Safaricom made up almost 60% of total market turnover. Of course, Safaricom being very liquid stock, we've seen it rally over the past, I'd say, 4 to 6 weeks. It's been bouncing up and down quite a bit over the last week between levels of 5 and 5.25. So where we've seen it weaken, strengthen, but there's still quite a lot of foreign interest in it. We're seeing them on both sides, both the buy and sell sides. EABL, always a foreign favorite. They've come in quite strongly. There are a number of buyers who are quite aggressive, and we've seen them pushing it up almost to levels of 250. So I mean that actually made up most of trading today. Although all that, we've also seen counters weakening across the board as we see profit taking place, and also as we move into the festive season.
Talking about profit taking place, that's really seen within the banking sector. We did have KCB hitting a low of about 27.50 in today's trading session.
Yes, that's true. From I think a high of about 30 shillings last week. A lot of sellers actually felt that 30 would actually be the ceiling. So we've seen a lot of profit takers come into the market, and we expect it probably will continue weakening. Also, on other banking stocks, we've also seen quite a bit of profit taking. Standard Chartered, after the REITs began trading, we've seen people taking profits on these because REITs price was at about 145. The market is currently about 230. We've also seen quite a bit on Barclays and Diamond Trust Bank. So these have actually weakened the index a bit. And also you have to consider that as we move into December, a lot of investors will actually go quiet as they go out for the holidays.
So looking at the T-bill market also coming off this week by an average of about 40 basis points, both on the 182-day and the 91-day Treasury bill.
Yes, we're seeing prime rates, interest rates coming off. This is in line with the forecast by most of the market for the second half of the year. It's quite encouraging because for most of the year we've had rates have been quite high. And as we close December, expect the T-bills prime rates to close roughly about 7%, probably with the 1 year closing at about levels of 10.50, about 10 to 11%. But it's quite good, and we expect we may see a rally as we open next year, despite elections coming in March. We might see quite a bit of a rally. We saw inflation numbers come out last week. It's come down to about 3.25, which I mean people will be looking to take positions to lock in double-digit yields, especially on the long end and medium term. So it's quite an encouraging market. We should see trade pick up actually at the beginning of next year. For the remaining part of the year, it will be pretty quiet because of the holiday season.
Well, let's look at the shilling under pressure in today's trading session, down 0.37% against the dollar. But the shilling is expected to strengthen, however, in the coming days due to the diaspora remittances that are due to come through for the festive season.
Yes, during December we usually receive quite a high number of remittances. These shoot up for people sending back money to family for spending purposes for the holidays. So we do expect this to strengthen the shilling. And of course, there's always the end of month actually demand, especially from the energy sector. But I expect this will actually be netted off by these higher remittances we expect in December.
And let's just touch on something as news that came out today. We've got 9 companies listed on the NSE 20 issuing profit warnings in 2012. But when you look at 2011, only 2. So this really talks to the kind of environment that some of these companies are playing in right now. Some that come to mind are those of Kakuzi, which are in the agricultural sector, as well as Sasini.
I think most of these companies are feeling the effects we had in 2011. It was quite a difficult year for everyone. the whole market, with inflation levels going through the roof, a weak shilling, interest rates really high. So it was a difficult month for all the listed companies, and these are the effects we're beginning. I mean, we felt actually throughout 2012. They're still being felt. We expect probably by 2013 to be a much better year, because 2012 has been quite a positive year. We've seen the shilling strengthen, although year to date it's been trading pretty flat. We've also seen interest rates have come off, as we mentioned earlier, which means commercial lending rates have eased somewhat. Also, we're seeing that there's a lot more inflation has come off, so actually in a way spending power has increased. So all these factors will add up to actually we should see better results in the coming year 2013.